As we approach April 15th, millions of Americans are preparing to meet the tax filing deadline. Individuals and businesses are busy working through tax forms and schedules to determine what they owe the IRS. For entrepreneurs, however, the tax code has become an obstacle to success rather than a means of encouraging the expansion of their firms. Today's hearing will look at ways U.S. tax policy can be improved to provide immediate relief for these leaders of U.S. economic activity. While the most recent economic stimulus package was focused on rebate checks, which aim to boost consumer spending, more can and must be done to foster sustainable economic growth. The tax code is often used to influence and encourage individual and business decisions. In fact, the Internal Revenue Code is filled with numerous preferences, deductions, credits, or favorable tax rates that boost investment, savings for retirement, and home ownership. However, in numerous ways, the tax code is stacked against the average small business owner. Despite a number of changes in the past 10 years, there continue to be an abundance of inequities and unnecessary complexities in our tax laws. While fundamental reform may be years away, there is an opportunity to modernize some of the more antiquated provisions which raise major obstacles and are particularly harmful to entrepreneurs. Today's hearing will focus on those aspects of the tax code that can and should be updated or simplified without delay. In conjunction with this hearing, the committee will also release a report outlining those reforms that will help small businesses weather the economic downturn and put us on the path to recovery. In its review of this nation's tax laws and their impact on entrepreneurs, the committee found that a number of provisions failed to adequately reflect the changing economy. Tax policies simply have not kept up with the shift to a service-based economy and lack adequate recognition of the role technology plays. Furthermore, home-based businesses are unnecessarily hampered by paperwork burdens, and depreciation schedules do not reflect the realities of the equipment and buildings that are part of today's small companies. Last but not least, there are provisions in existing law that shift investment away from small firms. The report outlines reform for each of these problems, while reflecting a need to update the tax code to spur innovation and growth. Given that the last major reform of the tax code took place in 1986, it is clear these changes are long overdue. Today, we will hear from business owners who can provide us with additional insights into how the tax code is affecting this important sector of the economy. From what we already know, the facts are not encouraging. While small firms are America's chief creators, job creators, just last week we learned that 80,000 more jobs were lost in March. We must take action to stop these trends and instead of losing jobs, make sure we are creating them. I believe there exists an opportunity to implement some reforms immediately. Doing so will have immediate benefits for small businesses. It will also ensure the nation's long-term economic growth. I would like to thank all the witnesses for testifying today, and I now yield to the ranking member for his opening statement.
I thank the Chairwoman for yielding, and good morning to everyone. Thank you all for being here as we examine ways to simplify the tax code for small businesses. I want to thank you, Madam Chair, once again for recognizing this pressing issue and for calling this timely hearing. April 15th is right around the corner, and it's this time of year that we all become more attuned to the tax burden placed upon all of us by our federal and state governments. Small business owners feel this burden profoundly as the question, how will this affect my tax bill, echoes all year long in each decision that they make. The complexity and uncertainty of the tax code limits small business growth, slows job creation, and puts a damper on our overall economy. In many respects, the tax code makes decisions for entrepreneurs, and all too often those decisions are to not upgrade equipment or offer health insurance or make other key investments because of the tax complications. According to the Nonpartisan Tax Foundation, Tax Freedom Day, the day that we begin to work for ourselves as opposed to working to pay taxes, falls on April 23rd this year. So that means that the average person basically from January 1st through April 23rd, all the income that they earn goes to the government, either the federal government, state government, local governments, government in one form or another. It's not till after April 23rd for the rest of the year that the person is working for themselves or their own family. That's outrageous as far as I'm concerned. That means we work 113 days of each year to pay Uncle Sam or the state or local versions of Uncle Sam before we earn a single dollar for ourselves. In 2001 and 2003, Congress passed legislation to cut taxes across the board on all Americans. Unfortunately, these tax cuts are set to expire at the end of 2010. In other words, taxes will go up in 2 years unless Congress takes action to prevent that from happening. That also includes the one of the most, I believe, egregious taxes, and that's the federal inheritance tax or the death tax, in which the federal government can take up to 55% of what a person has when they pass away, and that's generally property that's already been taxed during a person's lifetime. The two groups that are hit most acutely with this tax are small business. That's oftentimes why the business doesn't make it to the next generation, because it has to be literally sold in order to pay for the federal death tax. And those employees lose their jobs oftentimes. And the other group is farmers in this country that are hit most egregiously by this tax. Higher taxes, particularly on capital, cause the level of private investment to fall, a devastating blow to the many small businesses who rely on private investors for their livelihood. Before it sunsets, I want to see Congress make this tax relief permanent. It's not just the added benefit of paying lower taxes, but the certainty that comes with it. Small businesses are always better off when they can plan for the future, and having stable and predictable bills is a big part of that. The complexity of our tax code is staggering. At over 54,000 pages, or if you stack it one on top of the other, it's 8 Bibles thick. The code is a morass of laws and regulations that is bloated to an unmanageable proportion. For small businesses just starting out, it can be especially difficult to know exactly what to do and when to do it. Small businesses simply do not have the technical expertise and, in many cases, the financial ability to hire accountants to help them understand what deductions and benefits they might be eligible for. There's also a huge disparity in the way in which smaller firms compare with larger ones when it comes to tax compliance. In 2001, the Small Business Administration's Office of Advocacy released a report on the regulatory costs faced by small firms that contained an estimate of the paperwork compliance costs. The report showed that small businesses with fewer than 20 employees spend over $1,200 per employee to comply with tax paperwork, record keeping, and reporting requirements, more than double their larger competitors. Sounder, simpler tax policies would benefit both the government and small business owners by improving compliance and lowering costs. A local veterinarian near my district in Cincinnati found out the hard way just how complex the tax code is. Last April, the practice passed an employee wage threshold that required it to change how its 941 forms were deposited. Of course, the IRS didn't notify the veterinarian until August. She contacted her CPA and followed his advice, but the next letter from the IRS was a fine. After sending a letter citing, as she put it, ignorance as first-time business owners, that was her quote, she received not guidance, but a new penalty bill, bringing her fees to more than $2,400. That's a lot and often too much for a small business to absorb. Her biggest argument was that she used the IRS's electronic federal tax payment system and didn't see why there wasn't a system built in to alert users to things like passing into a new threshold. Most of all, she just wanted to know why things couldn't be simpler. We're here today because that is a fair question that deserves an answer. I'm looking forward to hearing from our panel their recommendations for simplifying and modernizing the tax code. Outdated provisions simply do not reflect real-world experiences and the way business is done domestically and globally. Again, I want to thank the Chairwoman for calling this hearing, and I look forward to working with the Chair to help our colleagues on the Ways and Means Committee provide real tax relief, simplification, and certainty to our small businesses.